Welcome back to episode 2 of the Wealthcare Podcast. I'm Briana and this is Glen, and together we make up the Evans Family Wealth team here in Ottawa. Today's podcast episode is all about tariffs. You've heard it talked about in the news. It's the talk of the town. They're hitting close to home and they're back. And clients, investors, and Canadians are concerned and they're wondering what our thoughts are.
Yeah, so just as a refresher, the issue with tariffs is just that it's like a tax on everything. So imagine you go to the grocery store and you're looking for the 25% off aisle. Instead, you just visualize this 25% plus sticker on all the goods and services. And so it's basically collected by the U.S. government, and it increases the costs of our exports to America. And now with Canada responding in kind, well, that's going to increase the costs of U.S. goods brought into Canada. So think of it as just a big markup on top of the existing prices that unfortunately either the corporations are going to have to eat or you and I are going to have to eat.
Yeah, that's right. But it's not all doom and gloom. The focus of this podcast, kind of like Glen's weekly newsletters, the Good News newsletter, is really to try to find a positive spin on this. So yes, tariffs are intimidating. They're scary. We are not used to them, and so they feel very new and different.
Yep.
But with tariffs come opportunities as well. And so part of this podcast and part of what we do at Evans Family Wealth is really try to focus in on, we can't control the market and we can't control President Donald Trump, but we certainly are able to still look at all of the opportunities out there and try to find the ones that look the best. So that's really what today's podcast is all about. So why don't we start with this? I think for a lot of people, tariffs are still so new that we may as well cover off the basics of them.
Sure.
So you explained earlier that tariffs are kind of like a tax. But why is it that the states and President Trump is putting these tariffs on Canadians? What's the reason?
Yeah, well, his sense is one of grievance that other countries are taking advantage of the U.S. consumer. And so he believes that by a combination of unfair trade practices that Canadians and other countries are keeping the costs of their imports artificially low, which makes it difficult for the U.S. manufacturers and service providers to compete. We, of course, have the opposite view. That's not what we think is happening in Canada. And indeed, it's not what esteemed journals like the Wall Street Journal think either. They have a famous headline of this being the dumbest trade war to ever have occurred. But it really comes out of this kind of victimhood mentality and a sense that other countries are trying to get one over on the U.S. consumer. And so by a series of kind of stop and starts, we've really seen this. He's kind of undone his own case, hasn't he? Just by taking these tariffs on and off and on and off and associating them with border security. Those are really properly thought of. Those are two totally separate things. But it just kind of reveals that the great theory behind this and the concept behind this is maybe a little bit less coherent than he'd like us to believe.
Right. And so we talked earlier about how if tariffs are like a tax, they will impact consumers because the price is essentially 25% higher. So that's how it impacts consumers. But how does it impact investors?
Well, so the big issue from an investor's point of view is, I would say, principally is uncertainty. And so to imagine this, really try to imagine yourself that you're either the CEO, the chief executive officer, or the chief financial officer of a Canadian company, and you've been planning on doing an expansion, a new manufacturing facility. Well, you can imagine that most of those executives are going to be kind of having T-Rex hands and not being able to reach the enter button to actually make these commitments until they figure out which way this is all going to land. Yeah. So I would say that, the cost of the tariffs is one thing. Less obvious, but probably equally, if not more true, is the risk that this just puts a chill on economic development in both countries until this kind of gets worked out. So investors have to look at this. Unfortunately, we have to look at it from a couple of different lenses. We have to look at it from the point of view of, okay, well, what does this mean in terms of inflation? Because if the cost of all those goods and services go up, probably inflation's going to go up. And that's going to make it hard for the Bank of Canada to keep cutting rates. We also have to look at it from the point of view of, well, how many widgets are Canadian companies going to sell into America if suddenly they cost 25% more? And so we have to worry about the earnings capability of those companies. Same goes with shipping, same goes with rails. And then we also have to be looking down the road a little bit to find out, to really assess, wait a minute, every day is a new story with this. So how much of this is actually ever going to come to pass, and how much of this is just red meat for the Republican base? So it's a bunch of different things we kind of have to keep our eye on. And at some point we'll get to the more fun part of this is to try to imagine how the investment opportunities that are going to come out of this,
right,
which is really where we would see ourselves bringing more value. But I would say right now, Briana, the biggest issue is just people are freaking out. And it's not just mom and pop investors. It's CEOs are wondering, what does this mean for our expansion efforts? So I think it's really the uncertainty that this raises which causes the most problems.
Yeah. And uncertainty can lead to investors making a lot of mistakes.
Oh, yeah.
So what do you see right now? Certainly our phones are ringing off the hooks these days, it seems, between that and emails with questions about tariffs. What is kind of the number one mistake that you see investors making amidst all this turmoil?
Well, the number one is to freak out and sell. And
Right.
I'm delighted that we haven't had a single client actually do that yet. We've had quite a few who have been expressed concern, which is perfectly reasonable. But the truth is that thus far, the biggest mistake that I think clients can make here is to actually capitulate out of stocks, particularly when, just a couple of sentiment kind of metrics. We often look at sentiment indicators from a contrarian point of view, right?
Yeah.
So like if everybody is bullish, well, maybe you want to be a little less bullish. But right now, nobody's bullish, right? So we're in a situation where investor sentiment is right in the kind of the depths of despair. So the proverbial fear versus greed indicator is hard pinged on fear. And what's interesting about that is that if you look on average a year later, the returns after having been on fear is 30% plus.
It's a big opportunity that's out there right now.
It's a huge opportunity if you hold on. And it's a huge risk if you wind up capitulating out.
Right. Yeah, there's no timing Trump.
No.
And there's no timing these tariffs, and certainly no timing the market. So right now what we're thinking is really help our clients and help encourage investors to hang on despite some of the volatility we're seeing.
I think that the central task, if you boil it all down, why do investors outperform guaranteed investments over time? Why do equity investors outperform bond investors over time? It's because we are willing to take the risk and we hold on through these time periods. I'll tell you a quick story. This is a bit of a spoiler for people who will be getting my email next week. But in 1962, a U-2 spy plane flew over Cuba and noticed, or the reconnaissance photos that it had taken wound up on the president's desk because it showed missiles in Cuba. So President Kennedy was obviously upset about this, and that actually spurred the Cuban Missile Crisis, 13 days where nuclear powers were literally, poised to take the World War III and to start Armageddon. And the amazing thing is, just imagine that, So it's October the 16th, 1962. We're in the height of the Cold War, and the U.S. finds out that there's nuclear missiles in Cuba and threatens a blockade and whatnot. Well, that month, understandably, the U.S. stock market dropped. It dropped about 10% intra-month. But here's the remarkable thing. It was only 13 days. And at the end of October, the U.S. stock market had basically recovered its losses. And it went on over the next year to go up about 30%. And so if the threat of Armageddon wasn't enough to really roil markets, it's just a reminder. Look, I'm not saying, we can't say that things couldn't get worse in the near term. But certainly when we have this level of fear and this level of anxiety, it's usually a buying, not a selling time in hindsight.
Yeah, I agree. So, I mean, we've talked now about some of the challenges that are out there, some of the volatility that's happening in the markets. We know that Canadians are concerned. We know that there's going to be some short-term pain.
Yes.
Some increased prices at the grocery stores. This is more than just the markets. It's kind of our every day-to-day. We've covered those challenges, but what if we move on now to what are some opportunities out there for Canadian investors?
Well, there's a great irony that, that the MAGA is Make America Great Again.
Yeah.
Well, I joked recently that it maybe should have been called MEGA, because right now what Trump's tariffs seem to be doing is making Europe great again. We've actually seen a remarkable kind of, at least a short-term move where, these tariffs designed to make America great again have actually seen the U.S. stock market drop more than the Canadian stock market since Trump's inauguration. I mean, you can't make this up.
Yeah.
Right? And more hilarious still is the fact that emerging markets, European markets, Chinese markets, this must drive Trump crazy. Chinese markets are up like 25% year to date. European markets are up, strongly double digits and actually moving higher because, geopolitics is a game where everybody gets a turn at the wheel, right? And so, Europe is responding. They're responding in a pro-growth kind of way. China's responding in a pro-growth kind of way. And so part of our job is to look at the world and to decide, okay, wait a minute, given this level of uncertainty, we might not make these changes today, but does it make sense for us has the investment thesis for Europe and China changed sufficiently, in a sufficiently significant enough way to make that a higher allocation in the portfolio relative to the U.S.? And timing is always an issue here. But it's hilarious to me that Trump is literally making Europe great again. And I will say, and people get a little bit upset when I say this, but I will say that it's possible that Trump should actually get the Order of Canada, which is a little bit of a bizarre thing to say. But here's why. Because investors have probably noticed the federal government and the provinces, the first ministers, have basically agreed for the first time in about 50 years that they're actually going to take down inter-provincial trade barriers.
It's about time.
It is about time. You have to wonder how it is possible that 6 weeks after Donald Trump came to office, we've been able to do something, or we're at the cusp of doing something that nobody's been able to do for 60 years. I mean, the person who instigated that change deserves a bit of at least a golf round of applause. And so I think that the risk of Trump's tariffs are creating political change in Canada like I haven't seen in my lifetime.
Right.
Right. And National Bank did a study where they estimated that the drag on GDP in Canada of these interprovincial trade barriers is approaching 3%. I think the number was 2.8.
Yeah.
Don't quote me on that, but it was a substantial number. So you can almost see that, look, if we cleaned up our own house, we could largely offset the short-term Trump tariffs. And by the way, that reduction in GDP costs, that could stay with us even after these tariffs come off. So that's one way that I think Trump has changed the narrative in Canada.
Yes.
Brought the politicians together. I reject this, but you probably heard this. If you're not on part of Team Canada, you're kind of, you're a Russian stooge or a Trump fan or something like this. This binary framing that you're either Team Canada or you're off the team. The world is a much more complex place than that. And we're certainly not abandoning our U.S. securities or our U.S. investments out of some kind of purity test. But what I would say is that this notion of Team Canada, it is having an impact on the first ministers agreeing to some things that they haven't agreed to for a long time. We're still a long way from getting energy east, which, make no mistake, we need to get that pipeline done. But we are getting more common ground in recognizing, and this is really what Europe has done, in recognizing that for a long period of time, Europe and Canada have prioritized the environment and social programs over defense and
Right.
over growth.
Yep.
Right? And what did we see this week? We saw a change in the U.S., in the German government, and even before that new government has formed, they've announced that they're prepared to spend $500 billion with a B above their usual debt levels in order to rearm and to grow their economy to be able to stand up to Putin. France is doing a similar kind of initiative, threatening, or not threatening, offering to extend its nuclear umbrella of protection to Europe. And so we're seeing a huge increase in spending and a huge increase in commitment that's kind of, it comes at the expense of the environmental movement, right? But it is pro-growth, it is pro-fossil fuels, or at least energy in general.
Yes.
And Canada has largely emulated the policy, or at least the Canadian Liberal Party has largely emulated the policy of the Europeans. And so to the degree that Trump, again, it's just 6 weeks, to the degree that he has changed the narrative in Europe and actually changed the political strategy in Europe, we're seeing similar things here. That's the opportunity for investors, right? If we can get on that investment bus, if you would, in the relatively early stages, then I think there's some real opportunity. So that's kind of what we're also looking at.
Yeah, I agree. And I think along those lines of kind of Canada coming together, it's been really neat to see for probably the first time in quite some time, Canada coming together as a country instead of each individual province doing their own thing. Maybe we're finally starting to all row in the right direction, or at least in the same direction.
Wouldn't that be nice?
Yeah, it'd be a change for sure.
I continue to believe, Briana, that if by any back of the napkin kind of spreadsheet here, Canada has the third largest oil deposits in the world. The third. We have the fourth largest natural gas deposits in the world. And we have something like just the sixth largest amount of exports. So we have a huge opportunity to increase our exports.
Yeah.
I read a report today saying that Newfoundland and Labrador have an untapped resource of natural gas via fracking between $400 and $500 billion.
Wow.
Right? So imagine even if we can't get Energy East built, imagine if they allowed fracking, now that the technology has improved, imagine if they allowed that to have LNG hubs from the East Coast. For what reason? To diversify our own trade partners, to support our allies in Europe and in Japan, and to grow the economy at the same level. So this change, which has been, for the last decade, this hasn't been possible, right? I mean, the current administration on its way out has effectively made this kind of growth impossible. And there's been good reasons that they've taken. But Trump shaking things up shakes up those calculations as well. And I'm just completely convinced that if we can get out of our own way, Canada is an energy superpower. And with the access that we have to three oceans, we should be a very favored trading partner beyond the United States of America. Does that make sense?
Agreed. So if I'm hearing you right, what I'm hearing you say is some opportunities for Canada are, first, maybe some global diversification.
Yep.
We've got these opportunities that we're seeing underway in Europe and in China and around the world beyond just America. And so looking to expand our investments into some other regions might be one way to go. Another opportunity that you mentioned is this potential for the provinces to remove inter-provincial barriers and grow the economy just by that alone.
That's right.
And then that third one that you had mentioned is energy. Mm-hmm. There's a real opportunity with the natural resources that Canada has that we might be able to better use and trade with partners beyond just the States.
And incidentally, to that point, Canada should be a very favored trading ally with America because we give them a whole lot of the type of crude, the heavy crude that they need for their refiners. The only other place they can get it, frankly, is Venezuela, right? They need that product. And that's something that Danielle Smith, I think, has been brilliant at kind of reminding them of. But it is, I say that only to remind our viewers that Trump needs Canada, right? I mean, American industry needs Canadian crude.
Right.
And, that gives us some optionality in terms of whether we should make that a little less easy for them to get. But it also means that we have that opportunity. If America is not going to be the taker of it, then we need to get it to other clients. And I think that is a great growth opportunity for us.
Yeah. So let's talk practical tips for Canadian investors. I've heard you talk about Europe. I've heard you talk about China and these emerging markets that are starting to really take off despite all these tariffs.
Yeah.
So tell me a bit about global diversification. How do we do it for our clients, and what should others maybe be considering?
It's a great question. Global diversity, there aren't a lot of free lunches that we have in this industry, right? And so there's an old saying that diversification is one of the few free lunches. And the truth is that in the last 15 years or so, it's kind of become a little bit less of an imperative because the United States of America has been so dominant for so many years. To the degree you had investments in other countries, you literally underperformed the U.S. So there's been a great disincentive. And it's ironic that we're at the start of the year because there's kind of a joke in this industry that every January we get the statements from all of the big investment houses, and they say that every year is going to be the year where Europe and emerging markets and China finally does better, right? And every year it's like, oh no, it didn't work out at all.
We've heard that before.
Right? So that continues to be the narrative, this year, even before the Trump tariffs, but in part because of the Trump tariffs, that came out. I would say that we've seen a big move, like, the European markets are up 20+%, China's up 20%. I would honestly say that I would not chase these markets right here. Like the idea that, like, if anyone's thinking about selling Canada and US and buying Europe right now at a 23% delta in the last 6 weeks, I don't think that's a good trade, right? We're not suggesting that today. But what I would suggest is that to the degree that Trump might actually come to rue, or America might actually come to regret the success that they have with this policy, because they have certainly woken up Canada.
Yep.
They've certainly woken up their European allies. I mean, in my life, we'll see what the next 6 months holds, but for those of us who watched Europe foot drag its way like a zombie through the financial crisis, they couldn't make a decision to save their life. It just went on and on and on because of intransigence. I can't believe what Germany and France have done in a week. I mean, it's breathtaking what they've done. And so the great irony here is that we might see a European army. We might, and $500 billion from just Germany, forget what France and everybody else is going to put in. If you get $1 trillion or more moving into defense and moving into that, well, that's certainly going to bolster what have been anemic growth levels there. And so I think that while I wouldn't chase it today, I do think you're right, that the certainly the European emerging markets I'm a little less convinced of, but certainly the European trade, which has been a widowmaker for the last 10 years, that looks like maybe there's going to be more to that story than there has been. The big risk there is it's one thing to say you're going to borrow $500 billion, but when you borrow $500 billion, you're probably going to see interest rates move higher, which is going to create some problems for them. So, currency, that's going to be an issue, but you're absolutely right. I mean, if there was ever a time and a reason to kind of dust off the global diversification strategy, this is it. And certainly our global ETF model has China, has Europe, has gold, and is doing very well. Thank you very much. So yeah, that's a great kind of strategy. Bonds too. I mean, what's your take on bonds in here?
Well, I mean, certainly our chief market strategist is talking about them.
Yeah.
They're it looks like there might be some opportunities in bonds as well. And we haven't seen that for a little while.
It has been a little while.
Yeah.
And so, I mean, this is one of the great ironies, is that Trump is actually getting his way with a lot of things. Not only is he kind of bending Mexico and Canada to his will by the threat of these tariffs, he has extricated America from, for better or worse, I'm not saying this is a good policy, but for better or worse, he has extricated America from the quagmire in Ukraine. That, like, it certainly seems, at least today, it seems like the UK, France, and Germany want to take that on. And, I mean, there's certainly going to be U.S. involvement, but to the degree that Trump is less involved there, which is what he wants, it allows him to focus on Southeast Asia.
Yeah.
So he's having some success there. The other thing he's having success on is he's actually seeing interest rates in the United States of America come down.
Yeah.
Right? Which comes back to the bond thesis.
Yep.
And why Jim is so bullish. James Thorne, our chief market strategist, is so bullish on this, because he thinks that the U.S. is having a slowdown, in part by DOGE, in part by some of these initiatives that Trump is having. And that's having the beneficial impact of bringing down the 5 and 10-year bond rates.
And Trump wants that.
And why? Do you know why he wants that?
Well, yeah, they've got a huge amount of the U.S. debt
That's
is
right.
rolling over this year.
That's right. Almost a third. I mean, imagine leaving your predecessor, leaving you with 11 or 12 trillion bucks worth of debt coming due in the next 12 to 18 months. And that's the situation that Trump's inherited. So to the degree that interest payments are already just slightly above the defense budget, he needs interest rates to come down in order to refinance this and kind of right-size things. So that's actually working for him. We're seeing the exact opposite, by the way, happen in Europe. So this is another one of those interesting kind of global dynamics where European rates are going higher out of fear of this great amount of debt that they're going to finance. Japanese rates are going higher.
Yep.
And American rates and Canadian rates are going lower, which is, good news for both our economies from that perspective.
Yeah. So we've talked about some practical tips for Canadian investors, and one of these being the global diversification, possibly bonds. There's some options out there.
Yep.
What about just for the everyday person? Forget about investing. Everyday consumers. They're being faced with, in the stores, prices are higher.
Right.
There is this tariff tax that is now on top of all of their purchases. Are there any just tips for the everyday person? How can you go about making these tariffs impact you a little less?
Well, I think that there is a movement to try to identify what are Canadian products on the shelves.
Shop local.
Shop local. Right. And so I think that that's probably a good idea anytime. Right. I mean, but certainly an event like this reminds us that our neighbors are probably our best customers and we're probably their best customers. And so I think it absolutely makes sense to, where possible, buy local. And the other thing that I would just point out is breathe. Right. I mean, we have come through. And again, I mentioned this earlier, but I'll just double click on it to say that to the degree you're reading stories about it being a binary, you're either with us or against us, this kind of binary Team Canada or you're a bum kind of thing.
Yeah.
I just think that is super unhelpful. It's not helpful for our elected officials to be talking about booing the national anthem. It's even less helpful to be talking about shutting off the power to New York State. These will not get us closer to a deal or closer to goodwill with the U.S. governors and politicians who are allies of us. There's a lot of chest thumping. Nativism going on that just isn't helpful to the process. And so just be aware that the media is skewing this. I mean, dear knows that Doug Ford would rather talk about tariffs than wait lines in hospitals. Whether it's Carney or whether it's Freeland or whether it's Trudeau, they're delighted. No, make no mistake, they are delighted to be talking about this rather than their record. Okay? This couldn't come at a better time for politicians who have driven the economy into the ditch. And so I would just encourage viewers and clients take a breath. This isn't going to be on all of your purchases. It's probably not going to be for a very long time. And there are ways for Canada to respond, to actually come out of this on the other side stronger. So, I don't see this. The great thing about global trade is it is a game which is played again and again and again.
Yeah.
And I think that's a huge weakness of Trump. I think he sees this as a one and done. I'll fix them and it'll be over. As if the Europeans and the Canadians will never find another market for our goods and services. As if the Europeans will never actually stand up an army and maybe not need America. And America at some point might actually need some allies of her own. They have in the past. So, I just think that we just all need to take a deep breath, right? We just need to relax a little.
Yeah.
Let's see how things go. We know that we're going to have this first series of discussions, and then there's going to be more at the beginning of April. So unfortunately, this is going to be a topic which is going to be in your face again and again and again. Mm-hmm. But this too will pass. We just have to remember the rational thing for investors to do is to have a hopeful and an optimistic outlook. And that's based, if the stock market recovered after nearly having Armageddon in 1962, and we've seen it recover after world wars, we've seen it recover after great recessions, we've seen it recover after crises after crises after crises, it's not happy talk to say that this too will pass. And so we just need to just relax a little bit.
Yeah. Relax and zoom out.
Yeah.
Right? Like, we are so inundated every day with the news telling us how bad these tariffs are, telling us how ridiculous Trump is, telling us how you just need to panic. And the reality is, zoom out a little. We have come through a pandemic in the last 5 years.
Yeah.
I mean, that feels like forever ago,
right.
And it wasn't, right? It was only 5 years
That's
ago.
right.
Just zoom out, get some perspective, and realize that your investments aren't based off of these day-to-day things anyways. No. Your investments are long-term. You had a plan well before these tariffs. You're going to have a plan well after these tariffs. And if you can just take a step back, look at the bigger picture, and take a breath, usually we end up all right on the other side.
That's right. And, there again, your biggest mistake, the biggest risk that you face right now is not the orange man in the Oval Office. It is the risk of the little person on your shoulder who's telling you to sell. The media, which is whipping this into a frenzy, and that old saying, if it bleeds, it leads, right?
Yeah.
And so we're just seeing, worrisome story after worrisome story after worrisome story. We just need to remember that this is why we're long-term investors. And we get paid. You're earning the equity risk premium, right? That premium over the return of bonds. You don't get that for funsies, right? Or nobody would buy equities. We get that because we hold on to equities during crises periods like this one that we're going through right now. And so, maybe just I would encourage people, you're earning it, right? I mean, this is how we earn the equity risk premium. And to the degree you need to, just dial down the degree to which you're checking in on social media and whatnot, and give this some time to work its way out.
Yeah. And this feels really new to us right now, but the reality is we've had tariffs before.
Yeah.
There have been tariffs before. And there's some important takeaways about how those have usually played out in the past. Things like tariffs often don't last forever.
Right.
Like, that's a pretty big one. Or how about the fact that markets adapt to them? It's a shock right now, but they will adapt to these tariffs. This is not the end of the world.
No.
It's not World War III.
No.
And again, this reminder of stay the course, stick to your plan, and this will all work itself out in the end. So hang in there. We know it's tough, but that's why you have advisors who should be checking in with you.
Yeah.
That's why you use advisors to have some of their expertise in these situations. It's reasonable that you don't know all of this stuff.
100%.
That makes perfect sense. That's why you have an advisor there to kind of do some of this grunt work behind the scenes and figure out where are the opportunities, where are the problem areas, and how do we structure portfolios and accounts to be best positioned despite whatever the news happens to be. And it just so happens that right now that's tariffs.
That's right. That's a really good summary. I would just say that there are, in all of the studies that have been done of the value that investment advisors like you and I bring, one of the biggest areas that we can actually bring value is exactly in moments like this, where we try to help clients not make the mistakes, right? If we can, this comes back to your neuroscience, if we can avoid those bad investment decisions that come from fear, then we're going to be much better ahead when things eventually turn here. So stick with it. This too will pass.
Agreed. So if I was to take away 3 key things from today's podcast, what do you think the first one would be?
Well, I think the first one has to be just this too will pass. Remember that this is a transitory news event. This is not the new normal necessarily. We just don't know. It's uncertainty, but it's not the end of the world.
Yeah. I think another one would be that despite the tariffs, there are strengths in Canada.
That's right.
We've got strengths from the energy sector. We've got strengths between provinces. We're able to work together as Team Canada and really come together to try to get through this time. And then another one is just beyond just Canada. Opportunities exist in turmoil.
That's right.
There's opportunities here, there's opportunities abroad, and part of our job is to help you find those.
That's the fun part.
Exactly. Yeah, we like that part. So that wraps up episode 2 of the
You're getting ahead of yourself.
Podcast. Episode 3 will be out next month, where we will presumably have something new to talk about.
Yeah,
I
let's
hope
hope
the news has changed.
Let's hope.
And so I guess this is just our way of summing up a topic that's been in the news these days, giving you guys a little bit of insights as to how we're thinking about this kind of thing. And if you need a second opinion, if you're looking for somebody to talk to about this stuff, our lines are open. They're ringing, and we are certainly happy to take your call too. So our information is in our biography. You can always reach out that way or check us out online at evansfamilywealth.com. And so that is us signing off for this week. We will see you back here next month. And until then, hit that subscribe button so you can stay notified whenever we post.